Hello and welcome to another wonderful episode of Iron Port. This program is proudly brought to you by Serene Insurance, Gold Company Limited, the Ghana Revenue Authority, the Ghana Port and Harbors Authority, and Ghana Link, who are the operators of the Integrated Customs Management System. Our proud media partner is the Business and Financial Times. Now, this week we are looking at the new tax laws and amendments which are expected to be implemented by the Ghana Revenue Authority. So we had officials from the Ghana Revenue Authority to look at these new tax laws and also how they will be effectively implemented by the authority. Here is a report.
First of all, I would want us to, let listeners know some of the new amendments that were, passed in Parliament, and whether they were old ones that, that also saw some perhaps, pushing.
All right, thank you very much, host. To start with, taxation is a creature of statutes, and so for us to administer any taxes at all, there should be a piece of a legislation passed by Parliament to empower the Commissioner General to be able to administer those taxes.
Right.
And so all the taxes that we administer in this country are backed by law. We have the Income Tax Act at 896. We have the VAT Act 870. We have the Customs Act 891. We have the CST Act, that's the Communication Service Tax. We have the Excise Act. These are all pieces of legislation passed by Parliament. And then it gives us the mandate to be able to implement. And so in the 2022 budget, there has been amendments to all the principal enactment, not all, but three main principal enactments. The minister announced during the budget presentation that some of the laws to be amended to see how they could relieve taxpayers of the impact, the hard impact of COVID. And so the bill went to Parliament, and then three pieces of legislation were passed to amend the principal laws. So the first one is Act 1071. 1071 was passed to amend the Income Tax Act 896. Then the second one is 1072, Act 1072, which was also passed to amend the VAT Act 870. And then the third one is Act 1073, which was passed to amend the waiver of penalties and interest Act, Act 1065. So these are the three main laws that we'll be discussing this evening.
All right. So basically,
a moment, just to say that these three acts are on a domestic front. That's domestic tax revenue front. Even though he mentioned the customs as well,
Act,
they have. If there's any amendment at all, it's on the other side, on the customs side. So these three are basically on the domestic side, domestic tax revenue division aspects.
So has the authority begun the implementation of these, new amendments and laws that you have mentioned?
Yes, we have begun. Simply because
when did you start in earnest?
1st January. Because the Parliament passed it on and the President of the Republic of Ghana assented into the law. So the moment it is passed and assented to, it becomes law, and then we have to begin the implementation.
The VAT Act. Are there any new things that have been introduced?
Yes, the 1072 has two provisions. The first one is the VAT flat rate scheme, where this time around the 1072 says that any retailer that earns turnover from 200,000 to 500,000 is supposed to charge VAT at 3%. And then the COVID levy of 1%.
So that totals 4%.
Yes, please.
All right.
So the reason is that this we assume
the current 17.5, was it 12.5 or 17.5?
No, currently they are still doing, before this amendment, both retailers, wholesalers were paying 3%.
3%, okay.
Yes, so for this category of taxpayers between 200,000 and 500,000, they are still with the VAT flat scheme, which is 3%. Okay, so, and the reason why we have reserved this one for this category is that category of taxpayers is that they are bookkeeping, they have problem with the bookkeeping process here and there. So we are, just as my brother said, because of these problems, we have reserved this scheme for them, so that we're able to, it becomes easier for them to account for their workings and then comply with the tax law. That's why we have reserved. So here, if you are a retailer, but your turnover is more than 500,000, you were excluded.
Okay.
If you are
apply the 3%.
You can't apply the 3%.
What would you be applying then?
You'll be applying the VAT
the
rate
normal
proper,
rate, okay.
where we allow you input and output. We allow you input and output.
Okay.
So that one, it's even more beneficial because at the end of the day, you'll be allowed for the input. You understand? Okay.
I want you to break down the input and output. What is input? What is output?
If you say input, it simply means that when you go and buy, for example, this bottle of water, from you, and then because it's vatable, because you have to charge VAT on it, you put VAT on it and you give it to me. I'm also going to use it to create more worth or value added addition. So when I finish, I must also charge VAT. Probably have to sell to my brother here. I'm also going to charge VAT because of added value or value added created. There will be an increase small on it, and that marginal increase is what I'm going to charge VAT on it. So the expenses that are incurred when buying from you, as far as the VAT is concerned, the law will allow me to deduct it from what I'm going to sell, the VAT that I'm going to charge my brother, and then you net it off. If the difference is what you are going to pay to the government. It's very, very easy. Yes, that's the input. Okay. And then the output.
Okay. All right.
Just to add to that, the input is the VAT on your purchases. So anybody who sells, first you go and buy before you sell.
Yes.
Basically retailers. They buy from the wholesaler and they sell to the consumer.
Right.
When you are buying from the wholesaler, you pay VAT.
Yeah.
So the VAT that you pay on your purchases is the input. And then when you are selling to the consumer, you charge VAT.
Right.
That is your output. When you are coming to account on the standard rate, it is the difference between the VAT on your sales and the VAT on your purchases. So you subtract your purchases, VAT on your purchases, from the VAT on your sales.
Right.
It is the difference that you account for. So the VAT on your purchases is what you call the input VAT.
Right.
And then the VAT on your sales is what you call the output VAT.
Okay.
So it is the difference. The mechanic is that you deduct your input from your output. Then the difference is what you account.
Right.
You charge the VAT on. So basically that's the difference.
All right. I just want to know, how would I appreciate what the VAT flat rate scheme is? What is it? VAT flat rate scheme.
Yeah, so like my
as
colleague...
captured in 1072.
Yeah, like my colleague rightly explained, before the passage of 1072, we have two categories of people who account for their VAT on flat rate scheme. The first category is retailers, and then the second category are wholesalers. You know, in the chain of distribution, you know, the wholesaler gets the thing from the manufacturer and then sells to the retailer, and then the retailer now sells to the consumer.
Right.
When we allow all of them to charge at the flat rate, it have impact on prices.
Right.
So what this law sought to do is to now separate the wholesalers and request that the wholesalers account for VAT on a standard rate, where the wholesalers will be able to deduct their input VAT from their output VAT and before the tax is charged. Now, when it comes to retailers, not all retailers will account for VAT on a flat rate. It is only VATs the retailers whose turnover exceeds 200,000 but does not exceed 500,000.
Right.
You are between 200,000 and 500,000. When you are a retailer and you fall within that category, the law allows you to charge for VAT on the flat rate scheme.
Right.
Any retailer that goes above the threshold of 500,000 would have to charge and account for VAT on a standard rate scheme.
Right.
So these are measures introduced. The benefit of this provision is that now the range, the threshold has been expanded for those for retailers.
Yes.
So 200,000 to 500,000, all those persons within that will account for VAT on a flat rate. And like my colleague rightly indicated, the presumption is that these are people who are having challenges with record keeping, internal controls, and difficulties in furnishing the Commissioner General with the required documentation. So we just pick your taxable value, and then we calculate 3% on your taxable value. Now, when your turnover exceeds, you are a retailer, but your turnover exceeds 500,000, the presumption is that you are in a position to keep proper records of your books.
Right.
You are able to engage consultants. You are able to engage tax advisors to help you put together your documentation. And so once your turnover, you are a retailer, all right, but your turnover, annual turnover, at the end of any 12-month period exceeds 500,000, you move automatically to what? The standard rate.
Right.
You join the wholesalers.
Yeah.
You join the importers. You join the manufacturers.
Yes.
All of them account for VAT on a standard rate.
Right.
So any retailer whose annual turnover exceeds 500,000 in any 12-month period would have to account for VAT on a standard rate. The law is carefully crafted to make sure that all this does not translate into price increases, cascading effect.
Yeah.
That is why some of them are going for flat rate and others are accounting for VAT on standard rate.
Right.
There's another thing under 1072.
Okay.
1072, the principal enactment, that's the VAT Act, Section 51C, introduced zero rating. That's the rate. The tax is calculated at the rate of 0.
Okay.
For businesses that are into locally manufactured African prints, textiles, textile prints, locally manufactured African textile prints.
Okay.
The law allows them to zero rate their supplies.
Okay.
So it means that their supply is taxed at the rate of 0. Their supplies are not exempt.
Okay.
Right? It is taxed at the rate of 0.
Okay.
Now, that dispensation in the principal enactment was supposed to expire in 2021, by 31st December 2021. Now, 1072 introduced an extension of that provision to 2023.
Okay.
So they've added 2 more years.
Yes, yeah.
So all businesses that are into locally manufactured African textile prints from 1st January 2022 to 31st December 2023 are allowed to apply a VAT at the rate of 0%, which means that they can make a claim for their input tax deductions. So that's another benefit that is available, that is captured in this amendment.
All right. Okay.
So you see that from the manufacturing level, the manufacturer will not charge VAT.
Yeah.
The wholesaler will not charge VAT up to the consumer.
Right.
So you see that at the end of the day, our African print. That's why
absolutely
my print is
that's the way.
cheaper.
That's the way of promoting our prints. So
exactly. still as part of the reliefs that the government is trying to give to the citizens.
Yeah.
Because at the end of the day, some taxpayers, because they acted contrary to the law, they have incurred penalties as well as interest.
Yes.
And for that matter, the Commissioner General would have deemed those interest and penalties as tax. That's what the Section 9 of Revenue Administration says. Penalties and interest are also part of the tax. So once you incur this, you go contrary to the law, and then this interest and penalty arise, they become part of the law. And for that matter, Commissioner General will collect it as tax debts. What this 1073 is seeking to do is to reduce, make sure that those who apply for, it is a dispensation. So if you apply that I have this challenge, I'm owing, say, 1,000 cedis, that's a principal, but the associated interest and penalty is, say, about 500. The law says that you apply to the Commissioner General from 1st January up to 30th June. Make satisfactory arrangements and pay this debts up to 30th June. We are talking about
6 months.
Yes. We are talking about accumulated debts and its associated interest and penalty up to 31st December 2020. Not excluding 2021. Okay. So you see, if you have any debts that you have accumulated up to 31st December 2020, and any interest or penalty associated, with this debt, when you apply to the Commissioner General and with the necessary arrangement to pay, Commissioner General will waive the interest and the penalty.
Penalties arise when taxpayers fail to file returns on due date. So once you are supposed to file returns on a particular date and you fail to do that, then the penalty is triggered. Interest arises when taxpayers fails to pay taxes on due date. So when you fail to pay tax on a particular date, immediately it is presumed that you are keeping government money. So that money begins to accumulate interest. And we can speak on record that we have a lot of our taxpayers having accumulated interest and penalties on their files. Huge interest and penalties over the years. And some of these interest and penalties accumulated up to 31st December 2020. So this is purely a tax amnesty. An amnesty that is introduced to cushion taxpayers. That look, once you have made an arrangement to pay the principal amount, any interest or penalties arising for failure to pay taxes on due date or failure to file returns on due date, those interests and penalties will be waived by the Commissioner General. The main law was passed last year, Act 1065. Act 1065 had a timeline. The expiration for the application is 30th September last year. So all those who couldn't apply on or before, those who couldn't apply before 30th September last year were cut off from the dispensation under Act 1065. Now, the new budget has introduced a new dispensation, giving the opportunity, opening the window of opportunity for persons who have accumulated interest and penalties up to 31st December 2020 to come to the Commissioner General and
to own up, and then make efforts to pay.
The good news is that those interest and penalties accumulated up to 31st December 2020 will be waived. Once you've made a satisfactory arrangement with the Commissioner General to pay the principal debt, the amount that is involved, any interest and penalties
that is accrued will be waived.
That to be accrued will be waived.
So do you have any figures with respect to how much you were able to collect last year per this particular,
Yes.
Policy?
About 2,000 taxpayers are applied for as at 30th September. and they made a satisfactory arrangement to pay. And we were able to realize about 1.2 billion.
Wow.
That's the principal.
That's good.
Where its associated interest and penalty was 1.1 billion. So you see how taxpayers, in one way or the other, they were owing Commissioner General and the government a lot. Yeah. So this dispensation is a timely. You don't want to go back to that era where taxpayers will continue to owe government. With our targets for this year, we are not going to relent on our effort at all.
Right.
We will not give any taxpayer the leeway to accumulate interest and penalties.
Yeah.
You see, so we encourage them to take advantage of this one, clear the arrears, so that going forward we're able to honor their taxes in a very simple way, so that all of us will be happy in the country.
Eye on Port returns after this break.
Every now and again, Goil makes good things happen. This time, Goil has introduced Super XP Ron 95, a higher grade fuel loaded with additives and yet sold at the same price as normal fuel. Goil Super XP Ron 95 enhances engine performance like never before. It maintains the engine by keeping it clean from carbon deposits. Goil Super XP Ron 95 is designed to burn slowly and thus improves fuel economy, making you save money after several kilometers. Goil Super XP Ron 95 gives you a smooth driving experience, that is, less vibrations. Fill up with Goil Super XP Ron 95. Now there's no need to pay more for any higher grade fuel. Goil has that sorted. Goil, good energy.
Electricity, then pay your taxes. Our taxes, our future.
Because you see, without our taxes, we wouldn't have good roads, good schools, better hospitals, street lights, and other very important social amenities. When we pay our taxes, we give our children free and quality education. Talga, my money too small. Why should I pay my tax? Look, small. Salifo, it doesn't matter how small or big your business or income is. You still have to pay your taxes. The little taxes from each and every one of us, when put together, could give your community clean water or that deprived school with tables and chairs. Please pay your taxes. It is your responsibility. It is your civic duty. It is the law.
Impressive factory. If only I had listened to you, I wouldn't have been in this mess. That devastating fire virtually wiped out the whole factory and my warehouse.
Remember my misfortunes last year? Serene Insurance Asset All Risk Fire policy that I took were there to pay for my damaged stocks in the warehouse. And my machines that were affected by the floods have been replaced. My accident vehicle is back on the road thanks to Serene Insurance Motor Policy. Currently, my goods are on the IC, covered with their marine cargo insurance policy. I was just telling Ajima about Serene Insurance.
Oh, Ajima,
tell him more.
As a road contractor, I make sure I do my contractors all risk insurance for the projects and then workers' compensation for all the workers on site. With Serene Insurance, they will make sure they will cover your unknown tomorrow today.
Serene Insurance, a new face of insurance. Call us now.
Welcome back from the break. Now, news and activities happening within the port and maritime industry next. The leading oil marketing company in Ghana, Goil, has, as part of the Chocolate Day celebration, distributed chocolate to drivers across its service stations. The gesture, which is to last for 2 days, also saw motorists being served with breakfast and ice cream. The zonal manager south of Goil, Helen Tremanting, led her team at the South La and Spentex stations to interact with motorists and also urged them
to continue to patronize their fuel from GOIL.
Today is a chocolate day. That goal, we've taken it upon ourselves to celebrate it with our cherished customers. We are doing it in all our southern zone in Accra. Please drive through any of our stations and get yourself chocolate or ice cream.
Speaking in an interview, Helen Tremanting said the distribution of the chocolate is an indication that GOIL appreciates motorists. She said GOIL will continue to serve Ghanaians with the best of fuels at all its service stations across the country so as to ensure the longevity of their vehicles.
If you want to keep your engine, please buy from GOIL. That is where you get quality fuel. Our Super Ron 95 is still available. We have the diesel with low sulfur, and we have our lubricants in there.
Up next, we have some international ports and maritime news. The executive director of the Port of Los Angeles, Jenny Seroka, has stated that U.S. supply chains have a chance to return to more normal operations after retailers replenish inventories next quarter, even if the next peak shipping season arrives sooner than usual. Seroka said he agrees with the chief executive of a major container line, AP Moller Maersk, who told Bloomberg TV in a separate interview that ocean shipping should start to normalize in the second half of the year. Maersk, which handles almost 1/5 of the world's container traffic, said it sees a 2 to 4% expansion in the market this year, with a strong first half followed by an uncertain outlook after that. Siroka predicted upcoming labor negotiations between dock workers taking place between the International Longshore and Warehouse Union representing them and the Pacific Maritime Association representing port operators and shipping lines would go smoothly and not cause disruption. Now to some schedules of vessels in the port, those at anchorage and those expected in the coming week, plus the Bank of Ghana exchange rate you need to know to clear your goods from the port next. We have your comments coming up shortly.
Here are some comments. Festus from Takwa says, I have registered my business and as a tax compliant person, I need to register for VAT so that I can invoice my customers who I transact business with to issue them with a VAT certificate. But upon trying to register, they charged 2,000, but registering the business did not even cost 500. Hi Festus, our guest said registration is free, but the law makes provision for some payment on account, which he suspects is the amount that was quoted for you. This one says, what are some of the strategies you are employing to achieve the 80 billion targets government has set for you? Hi, the Principal Revenue Officer from GRA said, the authority will continue with the automation of its operations, increased education, aggressive tax audit, compliance and enforcement.
That's all for this week's episode of Iron Port. We thank you for watching and thanks to the entire crew. Join us same time next week.